Okay, so today's topic is how to create multiple streams of income.
Yep.
Right? Everything from, I know real estate is kind of your big thing. I spend a lot of time doing like stocks and options, that sort of thing. There's a lot of interesting things to do there.
Yeah. Got the right people sitting on these chairs talking about it.
Absolutely.
So I think so. I think our best project was 150% return on investment.
I've always been very passionate about, something I care a lot about, is investing, and specifically investing using software.
Investments, and just like a successful person is just going to have like 5, 6, 7 streams, right? It's important to just get familiar with different types. And even though you might not specialize with those specific types of investments, well, you know, people
You
do
can partner
now,
with.
right?
Yeah, exactly. Let's do it, man.
We're back.
Yeah.
3 years later.
3 years later, yeah. Okay, so what's the topic of this? So we're saying how to...
Yeah. So how important is it to make additional streams of income is like the overall theme. And then we just each kick off like, 1 to 2 minutes introduction about yourself, your background.
Okay.
And then through the future topics that we're going to introduce, we'll kind of just distinguish how each of us will serve our purpose in making additional streams of income, so to speak.
Okay, cool. All right.
So I guess just kick off with an introduction about yourself.
Sure. I mean, why don't we introduce this thing first? So,
Sure.
Okay, so today's topic is how to create multiple streams of income.
Yep.
Right. I think there's a lot of different ways that we can talk about that, right? There's everything from, I know real estate is kind of your big thing. I spend a lot of time doing like stocks and options, that sort of thing. There's a lot of interesting things to do there.
Yeah.
Owning businesses. I think there's a lot of different ways you can create multiple streams of income. I think it'd be a very interesting topic, right?
We've got the right people sitting on these chairs talking about it.
Absolutely.
So I think so.
Cool. Awesome. Do you want to introduce yourself real quick?
Sure thing.
Yeah.
So, thanks everyone for joining. My name's Matt. I've built a kind of career around being in the enterprise IT space, and specifically, since 2013 is when I invested in my first piece of real estate property. I guess you could say since then I've been a little bit hooked. Predominantly been looking at real estate through investment means. So it could be long-term holds, it could be buy and hold, it could be buy and flip, it could be to my most recent strategy now, short-term vacation rentals. So I guess my whole philosophy is, like you just said, have multiple streams of income. If you could get into that 5, 6, 7 additional income streams coming in, I think you'll be in a really good position. But like you said, my kind of forte is going to be in real estate. So I think real estate's real interesting because just about everyone can get in. It's all about kind of the smart plays and tactics that you decide to do along the way. But hopefully today's session will be insightful to those interested in real estate, and I'll be talking to those subjects. And over to yourself and in terms of what you do and
Awesome.
how you can bring topics today.
Very cool. Just a good question. How many properties do you think you've bought and sold to date?
I was just doing a number figure on something like that, but buying and selling, I'm going to say close to about a dozen or so.
Yeah, that's good. So you got a lot of experience in the field.
I've been averaging for like one a year, and I think those numbers are, again, because I'm in the enterprise IT space, like real solid kind of side income stream. I think I'm very passionate about it, and I always look at ways to kind of scale up those numbers. And I think that's where I'm at right now, is just looking at more consistent ways and longevity inside of this field to ultimately just do this full time.
Yeah, awesome. I feel like you're pretty close to that. Like you got a lot of good spots. I know you got some spots in Mexico. You got some in Costa Rica. I think you're building one.
Yeah,
it's really cool.
I've really been in the sense that like I'm the most conservative. Like, okay, so I'm in business, but I like to make sure that everything is set into place before I rip and replace like my big major source of income. So that has to make sense first. A lot of people are a little bit differently. They'd like to kind of just get behind it and start sprinting right away. But I'm a little bit of the stage at, maybe 10 years ago, I could have done something like this because there's a lot to kind of, there's a lot riding on it at this point right now versus 10 years ago might have been a little bit different. But yeah, to answer your question, I'd say within the next 12 to 18 months.
That's awesome. Very cool. Right. Yeah. I kind of took the opposite route. I just jumped right in.
I like that though too, man. Just sink or swim.
It's a lot more risky, but
yeah.
I guess that's a good segue. For me, I've been doing this like my whole life. I guess I came right out of college and started my first like real business But to kind of say my background, I'm the CEO of LumiWealth now. This is probably going to be all over our channels, right? So you know me from that. But before that, I really been obsessed with software like my whole life, right? I started learning how to code when I was like 10 or 12 years old, so really long time ago. Nowhere near that age anymore. I wish I was still, but
Too.
yeah, right. The older you get. But yeah, I started my first like software company, quote unquote. I say that when I was 15 because I started actually making money. I was making more money than my parents were at the time, which is really cool when you're a kid. It's very motivating. That got me to go through business school. And after I finished business school and my master's in finance, which is kind of what got me into this whole LumiWealth thing, as soon as I finished all that, started my first business. We ended up doing quite well with that. Sold it. I can't talk about the details legally, but was quite happy with the numbers. And then after that, with that cash, I was able to travel a little bit, basically moved to New York, worked at a couple of different startups there, and bigger companies. Greystone is one of them, which is a large mortgage lender. I got to know kind of CEO there and like his whole family, because it's like a family-run business. I think they're doing $8 billion a year in mortgages, and I got to like work with their family directly, which is like amazing. Yeah. Probably the best business education I've ever gotten in my life. Really learned a lot from those people. Still keep in touch with them, actually. Very, very good group of people. Then went to go work for a company called Voyager, which is basically an app that is competed against Coinbase, right? Trade cryptocurrencies, that sort of thing. I was employee number 4 there, meaning so when I showed up there, there's like nothing. We just put stuff on the whiteboard, basically. That app did really well, grew to, I think, $3 billion in market cap at one point in time. It's really cool. Well, stock options did well, which basically all this stuff giving me enough funding to basically say, screw it, let's jump headfirst into LumiWealth, which, in retrospect was a little crazy decision, but it's something that I've always been very passionate about, something I care a lot about is investing, and specifically investing using software. Yeah, that's really what I focus on now. And for those of these people that are following the channel, really teach people how to use software to invest, right? Because a lot of people, first of all, will make a lot of silly decisions when they invest, right? Mm-hmm. You'll buy the wrong things, whatever. But then there's also like a huge advantage to having software behind it, right? Because you can do something called back testing, which allows you to figure out, what would have happened in the past. Yeah. A lot of people don't do that when they invest, right? They think, I'm going to follow this idea. It's like, well, do you know if that's a good idea or not? Sure. Back testing can help figure that out. Yeah. Software is also a lot faster, can execute very complex things in a very easy manner. Yeah. Right. So for example, we have these like martingale bots now and iron condors and butterflies, and you want to do this manually, it's actually quite complicated. Right. But we're still using software. We can do like really complex things. Yeah. And then the truth is that if you ever trade in the stock market or options or whatever, the person on the other side of the transaction was probably not a person, right? It's probably a machine. Yeah. Right. Like you're trading against BlackRock, you're trading against Citadel, you're trading against these people. You're not really trading against other human beings. So if you think about that, then you really have a pretty big disadvantage. Sure. Right? Because they could run circles around you. Yeah. So this is kind of evening the playing field, right? That's interesting. Yeah. So that's what I do, what we work on in my background. So
yeah. So I think that's real interesting and real timely, especially just given where we are. Essentially, you're saying that you're removing the human element out of trading because it's so complex and it's very advanced. And then you built the specific algorithms and formulas to compete with the best of the best corporations across the world doing this in mass quantity. And, they're seeing very good returns and you're able to keep up with them. And specifically when it comes to not only just your regular asset classes, but you're specifically involved in, I think, the cryptocurrency space more, right?
Well, we do a lot. We do kind of our main ones are stocks, crypto, and options has been a really big one for us lately. We do Forex and futures as well, not as much, but we're kind of across all the different asset classes. I'd say if there's any that we're really focused on lately, it's been options, right? Just because options really lend themselves well to software. It's complicated enough that human beings aren't very good at it. And there's a lot of like the details to it that you can like back test and figure out. And like we've just been getting like really, really good results with options trading, and a lot of like big demand from it. Crypto is probably second, right? There's a lot of interesting things you do with crypto, especially with these like smaller coins and things like that. Those are kind of our main thing. But yeah, it's been paying off really well. So we've been getting some amazing numbers. I don't know if you've seen kind of our latest stuff. There's one of our algorithms that was up, I think, 120% now in 2 months.
That was
just like a
I
straight.
think you showed me that video, right?
Yeah, it's
That
pretty
performance
crazy.
insane.
Yeah, it's nuts. Yeah, it's still paper trading, mind you, but we're starting to run this with real money, and I guess a lot of people are asking, let's see the real money thing, but every time we run in parallel, they basically give us the same results or very similar.
Yeah.
So I'm very confident that once we start running this stuff with real money, it's going to be crazy. We run other ones with real money. I'm just talking about that specific algorithm, right? That's up 120% in 2 months. So if you guys are watching, it's I'll keep people posted with how it actually goes, because if it does that with real money, we're talking about 50% a month. Holy shit.
Yeah.
I mean, like, that's crazy returns, right?
Yeah. So, and I guess the advantages to you, and we'll talk a little about LumiWealth a little bit more, but you brought up a point about investing with, the BlackRocks and the Blackstones, and these guys got these massive kind of algorithms in place and similar technology to you. You're competing at the same scale, with is it safe to say, like, wider set of asset classes in comparison to them? And also, what's the kind of barrier of entry in signing up with a hedge fund manager versus going with LumiWealth?
Yeah, you actually hit the nail on the head. I think that's really kind of the main thing is, usually this kind of stuff is meant for hedge fund managers, people with a lot of money. They build this kind of stuff. But lately, with the advancements in technology and AI, we can actually start doing these things that these big hedge funds are doing for everyday people, right? So what we've created is something that's kind of like, if you look at a hedge fund, they hire a bunch of these like PhDs and really smart people, and they sit down, they write all these computer programs.
Yeah.
We've done kind of the same thing, except it's more of a community of people that is doing this, and we're collaborating with each other.
Yeah.
So in a way, it's kind of like an open source hedge fund.
Wow.
You want to think about it that way.
Yeah.
Right. So we're able to compete against them because we have the same amount of brain power, if not more, right? Because we do have this big open community of people helping out, versus them, who's like, they'll have their 20, 30 people, and that's about it. And like, if they can't figure it out, then they're screwed.
Yeah.
Right. So I think in many ways, we're actually better than a hedge fund. Right. And we're much more affordable, much more approachable than a hedge fund.
Yeah.
Right. So yes, I mean, compared, you asked the question, how many asset classes they do. I mean, they probably do more asset classes than us, like the Blackstones, whatever, but we're coming at them.
Yeah.
We're getting there.
And you're really focused on the stuff that's recently deregulated, as opposed to they are more of a traditional type of asset, kind of like you said, like they're where the highway versus you have an internal network of professionals that you're working with, where there's a lot of kind of internal collaboration going on along there. And you might be able to kind of foresee something that the traditional hedge fund managers may not be able to, and get in ahead of before the whole rush comes in.
Yeah, I think so. I mean, the way that I look at it is I think of like Kodak versus Instagram, right? It's like Kodak was very closed source. You can only use a certain camera, film. You have to get developed at a studio.
Yeah.
It's really kind of like this. If you're a photographer, there's like really good photographers, and they have like all this equipment, they can just beat everyone just because they have all that stuff, right?
Yeah.
Whereas when Instagram came out, all of a sudden everyone's a photographer.
Yeah.
Right. That's kind of what we're trying to do with the hedge fund industry, right? So it's like everyone can kind of be a hedge fund manager, right? And we allow this big community of people to create stuff. And I think at the end of the day, and we're already starting to see it, we're going to have way more different types of strategies than they have, and we're going to be able to tackle all sorts of different things that they can't even imagine to do, because they have a staff of 20, 30 people. We have a staff, quote unquote, of 20,000.
Yeah.
You know what I mean?
Yeah.
Right. So it's like, it's, we actually have an unfair advantage in this way. So I think it's a very interesting play on things. So
I like the accessibility angle of it. Just the everyday or starting point investor will be able to come in, work with you at kind of any single entry point. And it's really innovation taking over at the end of the day. Which I think the big major corporations need to feel a little bit of fire underneath them, of the people that can come in, take a whole different look at the landscape and really put some pressure on them. So I think that's really interesting what you're doing.
Yeah, thank you, Ben. Thank you. It's been working out so far, So yeah, it's great.
Awesome,
cool. Great.
So a couple topics that we thought that we kind of just covered today, and I think in our last segment we kind of just touched on this one, but The first one that we just kind of outlined today, what plays are best to build your income portfolio. So maybe if we just kind of started with yourself again, you talked a little bit about options and crypto. Anything outside of that you feel you could kind of share with the...
Sure. I mean, the way that I look at it, I'd actually look at this from a more broad angle personally, right? What we do is something very specific, right? And it is, I think, a good income source because you could have like dividend paying stocks, or, we have like these iron condors that we sell, which is like an income strategy for options. These are definitely good ways to produce income.
Yeah.
Right. But the way that I would actually look at this, like to really answer that question of, how exactly is your phrase? You said,
like what are the traditional plays inside of your portfolio that you think would be best and worthwhile to share with anyone looking at it?
I mean, the way that I look at it, right, is I manage money for myself, my wife, my family, right? Like I manage a couple $1 million actually right now. And the way that I look at it is like we really want to stay diversified, and it depends on kind of what your goals are.
Yeah.
Right. We own a bunch of real estate, which is nice. You can talk to that more. But it is good because it's a physical asset. It doesn't behave the same way as the stock market might. Like there's still volatility in it, but you don't always feel it as much.
Right.
So I think it's good to own some of that. I think it's really good to own some sort of alternative assets. There's like some really interesting apps and websites you can buy, like wine and that sort of stuff. I actually think there's a place for that. Silver, gold, right?
Yeah.
Like commodity type stuff. I think it's really important. Stocks, I think, is really important too. Obviously own some stocks, S&P 500, that sort of stuff. I think it's a great investment. And then you can even take it further. I guess what we do is kind of like even more alternative type of like stock investment, which is really interesting because you could have different correlations. Like really kind of the end of the day is that you want to have a portfolio of things that are uncorrelated with each other. So if something blows up, you don't lose everything that you have.
Yeah.
Right.
100%.
And that's what we try to do with our LumiWealth product is we try to have things that are uncorrelated to the market, but still make a lot of money. That's kind of the holy grail.
Yeah.
That Condor Martingale, the thing that I told you about, is incredible because like the stock market dropped 10% and this thing is still going up. It's amazing, right? To me, that's almost more interesting than the return itself.
Yeah.
Right. But yeah, like that's the way that I look at it in terms of like a holistic asset mix, right? I think you should own a little bit of everything.
Yeah.
I don't think you should put all of your eggs in one basket by any stretch. Yeah.
That's really important. And you never want to be too invested into one specific asset class. I mean, if your whole net worth is in there and something were to happen, just flipping sides on the real estate side of things. I know a lot of people here who were just invested in Toronto real estate and then specifically in a condo market segment. And
they got
in 2020,
lately.
You need that to close on another property. You're real screwed at that point.
Yep.
So just like how we opened up, I personally think like every individual should have like 5, 6, 7 streams of income. Like you said, specific asset classes, commodities, gold, silver. You got your money in a Vanguard mutual fund, something, or index fund, something from that. If you're not really well versed, like you don't know which stocks to go in, obviously they can call you and be able to work with you to be able to see what sort of investment they can make with you, and you'd specialize and tell them where to go. But for the average individual, they may not have that, right? You could just go into like a nice index fund of the S&P 500. Do reasonably
great way to
well.
start.
Yeah,
definitely a great way to start.
And
STY, QQQ.
I like
Fantastic,
the Vanguard. A lot of them.
I think people underestimate how important these things are. Like 10% a year consistently is really damn good.
Solid. Come on.
Yeah.
Especially in this day and age, compounded 10% year over year. It's really hard to do that on specific stocks unless you're an inside trader.
Yeah. I mean, I think a lot of people, they don't really understand the whole concept, or at least don't fully internalize the value of compounding, right?
Huge.
Because I feel like you could tell people over and over 10% a year, it compounds over time. Obviously, we want to do a lot better than that. I think the plays that you've done a lot better than that. I've beat that pretty consistently too. We could always do better than 10%. Not like it's an easy hurdle, right? But we definitely want to strive towards beating that. But it's incredible looking at the compounding of this, right? Like, you do this for 10, 20 years. It sounds like a long time, but like you could literally just retire off of that. 100%. You know what I mean? Like especially if you're younger, you start off at, like 17, 16, whatever.
Yeah.
You start doing that. By the time you're 30, like you can it's optional whether you work or not, right? Basically.
Yeah, depending on what your initial investment is. And then to that point, even further, I know a lot of people if I could ever tell the 18-year-old version of myself what to do differently, like just take that $10,000 that I may have had something that I put it towards a car, let's say, if I put that $10,000 in a TFSA account when I was 18 years old and put it into an S&P 500 index fund, 20 years later, you're right. Not only am I retired, but I'm also not taxed on it, which is really cool.
Absolutely.
So there's some strategies. If I could rewrite everything, I wouldn't be here at this time. But
sure.
There's definitely some knowledge there. And then coming back to like what specific plays to the real estate side of things, I think real estate's really interesting because inside that stream alone, there's like 2 or 3 or 4 other streams. I mean, you've got, you purchase something, let's say you purchase it 70, 80 cents on the dollar, which is really, really good. So you've already got some built-in equity from it. And then that's one stream just right from the get-go. Then you've got perhaps a long-term rental play, or you've got a short-term Airbnb play that you want to do. You see your monthly income coming in. And then you've got any sort of appreciation of the property as well on an annual basis as well. So there's another income stream. So about 2, 3 multiple income streams just right off the bat inside of real estate alone. So I think just my overall message is have 5, 6, 7 streams across commodities, across real estate, across investing, across some sort of side hustle. Again, I've started a career here in sales, and I think just having that base foundation of something to have that you can, if you're good at it, you can work in building bonuses, commissions, maybe some stock option, whatever it is. Build some money there, and then look at other ways to have multiple streams of income. So, another 2020 happens again. It's a real tough, hard economy hits you. You're prepared. You're not just going to lose your job. You can fall back on the other kind of investment streams that you have coming in at that point. So I've always been kind of a big believer, and that's really been my message all along.
Yeah, it's interesting. Yeah, makes me think that there's another one we didn't count. It's starting on business as another income stream. But I think each one of these, to your point, is like there's details inside of each one, right? So it's like real estate. There's a lot of details.
Yeah.
Right. Like you can specialize in real estate for your entire life and still not know all of it. Right. Stocks, there's a lot of details. More alternative type of trading stuff like options or whatever. There's a lot of details. Running your own business, there's a lot of details. Cody Sanchez, actually heard her speak recently.
Oh yeah.
Very, very interesting person. She's, when it comes to that business part, I think she's one of the most genius people in the world for that sort of stuff. Yeah, she's talked about how you buy businesses and get like sweat equity in them, and how you like build a portfolio like a private equity firm.
Yeah,
really, really interesting. Cool. Each one of these have like a lot of details to them, right?
Yeah.
You have your specialization in real estate. I have my specialization really kind of like the trading stock type stuff, right? Or stock, crypto, whatever.
Yeah.
So why don't we kind of dive into each one of these,
sure.
right? I've done a little bit of Airbnb investing. I've done this, for better or for worse. It made good money. Gave me a lot of headaches, which is why I went eventually stopped.
Yeah.
But what's kind of what do you think is the best stuff to do in real estate, and how would you approach, if someone came to you and said, I want to be a real estate investor, right? They haven't done anything in their lives before. How would you recommend that they start?
First of all, I think you're psychic because you actually just went into the most perfect segue there possible about where we were going. So good on you there. Just a natural born host. Awesome. So yeah, I think just taking one step back and just, I learned from my own personal experiences, for better or for worse, especially that's why I've just liked having my own nest inside of the enterprise IT space. So if I do mess up real bad one day, it's not the end all for me. So what I first started doing is I just, born and raised in Ottawa. I think that's where I started. That's where I bought my first property, moved over to Toronto in 2015. And that's where I started buying property out here. And it was super profitable. Anyone in the 2015, 2016 era in Toronto knew that like your annual appreciation on condos, which is what I was buying into, they'd appreciate like crazy percentages, man, like 10, 20% annual points every single year, like guaranteed, all the way up until like 2020. It's crazy.
And that's on the asset, right? That's not like your equity is going up much faster than that. Right? So if it's going up by 10%, then your equity is going up by a multiple.
Well, yeah, because then you're making your monthly payments. So the mortgage amounts is going down every single month, and then the appreciation is going up every single month. So yeah, every single year as well. So you'd see that spread just increase.
So just so we're on the same numbers. So say you buy a property for, let's say, $1 million, just as the numbers are easy, right? I think at the time you're able to put 10% down, right? So you'd have a $900,000 mortgage, $100,000 in equity. So if the $1 million property goes up by 10%, it went up by $100,000. Right. So now your property is worth $1.1 million. But you still have that $900,000 mortgage.
Spreads 200.
Right. So now you went from 100,000 to 200,000. You just doubled your money in a year. Right? Not to mention that you're getting income, paying down the mortgage, all that kind of stuff.
Exactly. Because that's after your year 2 where you look at that spread for 200,000, your mortgage is less than the 900,000 because you're making your monthly payments, or your tenant's making your monthly payments.
So you doubled your money every year for a couple of years.
And it was so lucrative at that point in Toronto.
Incredible.
And like everyone loved it. It was like the secret that no one really talked about. And then you looked at in 2020, and kind of funny, like the last time we did this video, everything was, still kind of new at that point, but markets were real stagnant for the past 3-4 years. I think you look at like the kind of condo appreciation rate, it's almost been flat.
Really? Yeah. I'm surprised because we have such a large influx of population. And everyone keeps complaining about rents, but condo prices did not go up.
So what's interesting about rents right now is that it's very hard for you to have bought a property recently and to cash flow on it, especially if you went down with like your standard 20% play, just because your interest rates have gone up so high. So if you've closed on a property recently, you're most likely not locked into anything good anyways. Like the best you could lock in is like a 5% and change, I'd say, over like a 5-year term, which is not great. You're still paying a pretty high amount. So if you're not going to cash flow on it, why would you buy it? That begs the question for me at this point. So what I've specifically done, you're asking me like what's good inside of real estate, is I'm actually, and most of my investor circles have done the same thing, removed all of my investments, or in the process of removing all of my investments from Canada. You're going to hear this as like a very coined kind of term and kind of just position in the investor world right now, because developers aren't developing because interest rates are too high. Investors are not investing because interest rates are still high. So yeah, the condo markets have been flat for the last few years. Doesn't matter what immigration is doing. Immigration may not necessarily be able to have the capital to buy into this market. So they're going to start renting. It's going to drive rent prices up. But still, if your rent prices aren't covering your mortgage costs, why does an investor want to come in and invest to this market? Meanwhile, you could look at other properties in the USA that are still a lot less than here in Toronto specifically. I mean, you have big hubs like, close by hubs like even Detroit or Cincinnati, anywhere in Ohio, places in New York that are still going to be reasonable. You could come in, you could put in your 20-30% down, let's say, at a much lower price point than here in Canada, and you have enough equity inside the home that your mortgage rate is still going to be, they have similar interest rates to us, but they're still going to cash flow because US is still a rising population. And, it's not uncommon for someone to look at like your standard rental in one of those cities that I just mentioned to be like $2,000, $2,500 a month on a lower end. And that'll cash flow nicely when you only got a 450, maybe a 400,000, even less. I've seen properties in the twos there, starting the 200. So everything's going to be a little bit depending on your circumstance. I think that's why it's just so helpful to be able to work with someone who can analyze the whole return for you, analyze the purchase for you, and just guide you into the right direction. So that's what I'm necessarily doing is I'm stepping away more from the Canadian markets. I'm looking at more international markets, looking to personally set up a presence in the US and have like an LLC started out there, similar to what I did out here. And then specifically, you talked about Costa Rica. I was buying properties and flipping them out there, beachfront properties. I've also, like, similar to yourself, I love the fact of traveling. So I've incorporated that into my business model.
They just get to be in Costa Rica for a bit.
I love surfing. I'm a terrible surfer, but I want to make it something.
Great surfing out there. Yeah, Hako Beach is amazing.
And then Cabo, of course. I've crunched the numbers in Cabo. I looked at the annual kind of population rate coming in there from a tourist standpoint, perfect weather year round. There's like something like 350 sunny days a year or no rain days a year, which is crazy.
So it basically never rains.
Basically never rains. It's in a desert kind of climate, which is so cool because you got like you got mountains or hills in the distance, then you got your desert, and then you got your beach, which is 3 in 1. it's so cool to see that. I've never seen the geography like that. And then also just the numbers make sense. It's the highest average daily hotel rate in all of Mexico, more than Cancun, more than Tulum.
Really?
Yeah. And just kind of like an extension of California is the way I look at it. It's just direct and slap dab right down the coast of California. It's actually called Baja California Sur in Mexico, which is like south of the Baja California. So great surf there as well, great weather, great cuisine. So I like that whole incorporating travel and experiences into my investments. I don't ever get personal about it. I kind of don't really care where I invest in, but if the numbers make sense, I like going there, I'm all for it. So that's kind of my angle these days. Removing myself out of Canada, looking at more profitable locations that make sense from a business perspective to go in and invest. And then, there's some complexities involved there, but I think it's really important that you're working with someone who knows what they're doing out there.
Yeah, it makes sense. And I think that's what you're working on doing. You provide consulting to people to help find properties, that sort of thing, right?
Yeah, I think just looking in at it, if I just knew everything, especially just walking through my most recent kind of closings inside of Cabo, for a foreigner now investing into Mexico, there's going to be some restrictions there. Kind of called like the gringo tax. But so you got to be able to work with the right kind of professionals to navigate through like the complexities there. So a legal team, an accounting team, a real estate team, property management team, when that all kind of comes into place. So yeah, that's essentially what I'm doing, is being able to have a turnkey service where that's all available for you. I can analyze the whole business project or rental project or real estate project that you may have in place. And one step further to that is like I was doing in Costa Rica, kind of buying and flipping, buying the land, building the construction, and then flipping the property. I'm taking that whole model out there to Cabo with me. And that's where I see the most potential at this point right now.
Just saying. So you think, because I was going to ask you a question too, is like, where in the world, or let's say North and South America.
Yeah.
Right. The Americas.
Yeah.
Like, what cities and what countries would you be parking your money right now, and why?
I love that question because I give it a lot of thought. So if I had an unlimited source of wealth right now, and I could just pick, maybe 5 different places that I would go that make sense. So I really like still the US. I like Mexico as well, although Mexico, especially since when I bought, it's gone up. It's really shot up in price. So I've done well there. Buying in 2024, I'd have to really examine it to see if it makes sense, or see like a specific pre-construction project that makes sense, but still see really good things in Mexico. Actually, the Mexican economy is just increasing so much. If you've actually monitored the peso and what it's done over the last 12 months, your US dollar is getting significantly less buying power now in the US because that economy is taking off right now. It's crazy.
Yeah, I think what happened was when we put tariffs on China, basically all that moved to Mexico.
100%. The manufacturing, the automotive industry, the labor, all of that kind of moved out to Mexico. Are we still good over there?
Yep.
Okay. So, and then like maybe just cap that segment off. Big potential in Brazil, actually. I see a lot of places in Brazil that like you could still get a beautiful place for like $200,000-$300,000 American. Real solid investment opportunities there. That's a real booming economy as well. I'm going to say Dominican Republic, I really like. It's got very favorable tax advantages there. And I'm really about, and I'm going to be careful about what I'm saying here, but I really like creating a favorable tax structure for yourself. And I think that personally, Canada has a horrible tax structure set up for the everyday individual, right? So from a business perspective, there's some advantages of looking at countries that are going to be a little bit more friendly to what you're able to bring to that country, and they really want you. And again, that's kind of like an extension of the services that my consulting services can provide. It's just perhaps some places that'll be preferred destinations when it comes to incorporation and tax structure. So Dominican Republic, a really good one. All those kind of spots in the Caribbean, some of them are going to be really high entry point, like the Cayman Islands or like Barbados. Very difficult to do unless you got like $1 million to go and play there. But if you're looking for more on the starting side, that's probably not appropriate for you. So the last one I'd say to cap things off is like Colombia also has some really good high tourism right now, cheap real estate. People are flocking there. And you can get a nice property for like under $200,000. So that's probably another one to round off the list.
Interesting. You're thinking very international. I like that. you know.
And that's just the Americas. I could actually give you some spots in Europe as well, but your question was more focused here on the Americas. But yeah, those are solid 5 or 6 options I just given there.
Yeah, the reason why I asked that is because, you know, I think most of our audience is you know, the United States and Canada. So it's like, what do you do there, right?
Yeah.
Like,
Yeah.
if you're from that country. I think investing in like a Europe, that sounds nice, but it also sounds like that's very expensive. Just fly there and like manage its different time zones. Like, there's a lot of complications there.
Fair.
But you're also looking there too. Like, where would you look in Europe? You know?
So yeah, I think coming to the flying there, I get it. Again, if it comes to like a favorable tax structure there, so I see myself as maybe taking advantage of different locations to have different purposes for myself. So from a business perspective, from a tax structure, and you're kind of like me, like I don't necessarily like to stay in the same spot year round, right? Like I'm okay with 2, 3,
especially living in Canada. You got to go down south.
Every Canadian
way
just
too cold.
Where snowbirds just flock down to Arizona and Florida out there.
Yeah, exactly.
Yeah, coming back to Europe, extremely favorable tax structures out there. So I would say, you know, you'll hear places like Monaco and perhaps Switzerland because they're very lenient to the elite out there. You just go down with some money and they'll keep everything real quiet for you and safe. But so I'm looking at my same strategy. I'm looking at places like Portugal, Spain, Italy, really favorable and cheap property out there as well. And tourists just like to flock in there. Now, if I'm going wider and outside that, Dubai has...
I've heard very good things about Dubai, actually. Very low taxes there, right?
Zero taxes.
Very high growth rate.
For the most part. It depends how you set up your structure, but if you're going to be in a free zone, if I'm not mistaken, it's going to be a 0% tax, and I think their local tax is something like 9%, which is still dirt cheap. Real estate-wise, you get a lot of people flocking out there, a big economy that's just booming, so people are moving their money out there, and it's a very innovative, technology-driven society, skyscrapers that are just doing the most, you know, breaking every single Guinness Book World Record out there. So from that standpoint, it's very attractive. And believe it or not, places like Malaysia, Thailand, in Singapore, great tax structures out there. Real estate still, for the most of those countries are what I just mentioned, very affordable, and a huge booming economy that's just taking off. So a lot of people are just taking their money out of, you know, unfavorable locations that are not seeing good returns and moving it to countries that I just mentioned there and are doing a lot better.
It's very interesting. So that makes sense. So it sounds like you're kind of looking at, just in hearing you talk, it sounds like you're going down, okay, do they have a lot of tourism?
Yeah.
What's the tax structure like? These are kind
of
the main things.
But everyone's going to be different.
Yeah.
That works. I like that. But someone's going to just say, hey, I want an entry point here. I would just, like, if you look at a potential vacation property and it should probably be generating you like an extra 20 to 30K of net income, like that's kind of solid. You may not care about the tax structure. You might just say, hey, I just want to make an extra 20, 30 grand a year. It's tough for me in the US. It's tough for me in Canada right now. I need an extra stream. So forget about all that tax structure stuff. It depends who you are. Everyone's situation, we're going to have a different like analysis for them to see what makes sense and what their overall goals are. But yeah, some of those things you just mentioned, tourism, is it solid? Is how the economy, is everything safe? Keeping your money there. And then just having the boots on the ground, so to speak, the people being able to work with you to get all set up and everything like that. That's huge because you don't want to be taking time out of your busy day, your work, your family, where you live to have to go to these places and start managing. That's a nightmare. That's what you don't want. So going through that process, making sure it's all streamlined, like I said, turnkey, that's something that we can help you with. And those are some of the key data points that we look for.
Interesting. Yeah. Okay. So I guess let's say if we want to do a specific thing, right? Let's say I come to you and I say, and I wouldn't mind doing this. I wouldn't mind, like, personally, even buying a place like.
Hold on, am I selling you now?
Maybe.
Like, this sounds really good.
I wouldn't mind getting a property down south somewhere. You know, twist my. I got to fly out there and take care of my property.
Oh yeah, you did that whole LatAm retreat at one point. So
yeah,
it only makes sense for you.
Yeah, we lived out of Tulum for a couple of years. It was very nice. Love Mexico. I'm a big fan of Mexico. So let's say I want to buy a property. Where are you looking right now? Where let's say where are you looking for your next property? What do the numbers look like, and how would it be structured? Like, how are you thinking about structuring a deal, and How much money do you think you'd make off of this?
Yeah, that's fair. So,
Yeah.
my next spot personally is Dominican,
Right.
just because
Yeah.
I like the tax structures that come with it as well. But I'll leave that table for the time being. You would look at a property potentially around depends what. So like a condo, you could probably have a condo for like somewhere in the ones, like 150, 160 US dollars,
In Dominican?
160,000. Yeah, in Dominican.
Wow, it's very
And
cheap.
then and like a 2-bedroom, a little bit more.
Can you actually get financing on that too?
So that's the interesting part. So my preference is I really like buying a property in cash, just because I don't have to deal with a mortgage. I don't have to deal with anything else. But to answer your question, yes, you can. So like you could have some global financing company work with you, and similar to how like the credit bureaus would run like a check on you here. They have their systems in place to do it over there, and you'll get a finance deal.
So if it's like $150K, that means you could buy a property, let's say for $15,000-$30,000. That's quite cheap.
With your down payment, is that what you're talking about?
Yeah, down payment,
for sure,
yeah.
for sure. It depends. So like, I don't know if they'll be as lenient here, like a 10% structure. Like sometimes you see it here, they might require a little bit more, sometimes maybe closer to like a 30, 40, 50%.
So that's fine.
But
okay,
still,
that makes sense. Yeah.
And like a 150 is going to be a nice property. If you want to, you could totally buy a property for like 100K in the Dominican. So like, if you wanted to go in for the low end and still like have a property manager come in, do it all for you, your returns are still going to be pretty cushiony. It won't be as high as probably like 20 to 30,000 like I projected it to be, but like it can still be a decent return. I look for like a net 10% return. So
10% in terms of what?
Of the purchase price. So if you buy it for 100,000 and then you net out $10,000, that would be your net yield
Of cash flow for that?
of cash flow.
So like a cash on cash,
Yeah.
10%. That's very good.
Yeah.
Like to find cash on cash deals like that in the United States is actually very hard. I worked in real estate for a while.
Yeah.
Like, you're talking about cash on cash, 5, 6, 7% is a great deal. 10% is phenomenal.
Yeah, great.
That's
Yeah.
wow.
And I think that's what you'd probably expect here. Like again, in Canada, it doesn't cash flow. So you're actually like a negative net yield. In the US, you're right. It's more single digits is probably more appropriate, but in these places, that's totally possible. But what's interesting about it is that, remember, like if I'm buying it in cash, my net yields are, well, I guess like there's no carrying cost for me. So I don't really worry about like a bank, coming for a payment or something like that. Like all I really have to pay for is like keep the lights on. I don't know, an HOA fee of some sort if there's a condominium. So that's the play that I specifically like, that I would do. But yeah, you could definitely work with some financing companies out there. We have contacts in place to be able to set you up with who to speak with, realtors to advise you on the project. And again, like the whole goal is so that's streamlined and it's turnkey white glove service for you. So you don't have to worry about it. You can be busy working away in Canada, just making a little extra money on the side doing that. That's awesome. And visit the property. Most important part, visit the property.
Yeah, absolutely. You're convincing me. I kind of want to get a place in Dominican now. I actually haven't been to Dominican yet. I've been like all over the Caribbean. I haven't been to Dominican Republic yet.
Yeah.
Republic yet.
It's beautiful, man.
I heard it's really nice. Yeah.
Yeah, it's beautiful. And that's an economy that's really changed as well. Tourism's like just advanced itself. Like everyone's kind of speaking English as well to the the gringos that come by there, that they really appreciate what you bring to the economy. I know a lot of Canadians, a lot of Americans have just moved out there full time, made that their thing. Same thing with Mexico. Like they've just moved on out there because things just don't cash flow well out here, and it's something they see it as a better way of life. So that's something I'm interested in. Again, just seeing multiple locations that make most sense for me. May not work for everyone. Everyone's situation is a little bit different, but it's just because you hear high interest rates doesn't mean that like real estate investing is dead. No, real estate investors are smart. They're going to find a deal somewhere. And that's all I really do is I just look at deals in specific places that make sense to me. I want to travel. I like, the culture. I like the weather. We can all make that all intertwine and work together. That's awesome.
That's very cool. I dig it. No, I want to get a place there. I'm actually thinking that. Because that's really good.
You're like a crypto bro. You can totally do it out there.
I already did it.
Yeah.
I have a kid now, so I got to worry about that. It's a little different. We used to go to Mexico every year, my wife and I, and now we have a little baby, so it's kind of like harder to go out there now. But I'd still go visit for a little bit.
Possible, yeah.
But also just the numbers are really good. I mean, like let's say if I could buy a property, 150K,
Yeah.
I'll put down 30%. That's like $45,000. It's not going to break the bank. You know what I mean? That's actually a pretty reasonable thing for real estate purchase. Jesus, it's very cheap.
Yeah.
And then if I'm yielding 10% cash on cash, I'm assuming that that's on if you bought it in cash. So if I finance that, so I could actually be making 15, 20% a year on my money. This is very good in terms of just like cash flow.
Yeah.
Not to mention this thing is going up in value too.
Yes.
Right. So, make it 20, 25, 30% on this thing. That's incredible returns.
And I think, you definitely see the best returns through like Airbnb. I know a lot of people who just go into it for like a traditional rental play, 1-year lease, something like that. So it depends what you want. Like the Airbnb, I like it because it's the highest yields. But at the same time, your maintenance is going to increase because you got a constant influx of people coming in and out.
You need a management company or something. Right?
Exactly. So like that's the whole thing for me is that the management company just looks after it. So yeah, maybe it's a play where I hold on to. I personally see myself holding on to them for a long time, but you never know. It could be 10 years down the line and it's just, becoming difficult to deal with. Those maintenance costs are now eating away at my yields. So, I may look at another spot, but that's what I see as a real good kind of source of income for the time being and a good play right now.
Hey, when you're looking at these properties, let me know. Maybe I'll join in on one of these.
I'll give you the friends and family discount.
Do you actually do that? Like, I know you buy a lot of property on your own. I think you mentioned this once that you pool money together with other people, right?
Yeah. So that's really Costa Rica. So got some pals and some business partners who were doing this for a long time. And this was right around that 2020 era where I'm just like, man, these Toronto markets, like they're taking a beating right now. And then got popped on the phone with some guys that were doing it out there and they walked me through their whole portfolio, sold me on Costa Rica. Here are the returns. Here's what we're buying it at. Here's what we'll sell it at. You want to come down and see it? A couple months later, I was on a flight, go down and see them and see their projects, building beautiful projects right close to the beach. So that was the whole inspiration. Like that moment is actually what started the whole international real estate investment portfolio for me. And inspired me to also take that model and build it on my own. And that's where I went out to meet some of the contacts I made out in Cabo. Like I said, it's a whole kind of desert climate. And if you're not familiar with the Cabo area, it's fine. But Cabo is like on the most southern part of that peninsula. And you got coastline up what they call the Sea of Cortez, which is going to be on the east side of Cabo. And then on the west side, the Pacific side, you go all up along the coastline towards California from that side. Man, we're talking like hundreds and hundreds of miles of beachfront property that is still untapped. So there's going to be some complexities there, but there's definitely going to be, it's going to serve its value. And as you look at Cabo, it's just a booming population. And a lot of people are just going to these other areas that are just a little bit more quiet as well. So you want that beach life. You could build like a beautiful property with beach views, potentially right on the beach or walking distance, but beach views. And you could build that land, purchase price of construction, labor, everything like that, and still be very, very profitable. And that's what we were doing in Costa Rica. We were doing about 130, 140. I think our best project was 150% return on investment.
Over what time period?
Usually within a 12-month build. It
wow,
could be
that's
like
great.
quickest project, 6-8 months. Longest project, I think, was our most recent one because interest rates got really, really high. But yeah, like 12 months is what I would say would be a good
150%, 12 months. You're putting up like algo trading numbers, man. That's awesome.
Why I think it's important though. Like you got to have the real estate, you got to put the asset classes aside, those investments, and just like a successful person is just going to have like 5, 6, 7 streams, right? It's important to just get familiar with different types. And even though you might not specialize with those specific types of investments, well, people that
you
do
can partner
now,
with,
right?
Yeah, exactly. Yeah. 100%. Yeah. That I definitely agree with that. Makes you want to actually buy a property with you the next one.
I want to invest with you, man. Let's do business.
That's great. You don't get swapped, right? Yeah.
Oh yeah, let's go.
Yeah, absolutely. Yeah. I mean, like whenever we do like algo trading, there are some investments that we have that are showing like those triple digit numbers, but those are difficult to come by, right? Like it's just not an easy thing. I'm sure in real estate, it's the same sort of thing. Like it's not like you're just, or are you? I don't know, triple digit. Like how often do you get like a triple digit return in 12 months?
So you want your triple digit return,
Yeah.
like 100% return on investment means you put $100,000 in, you better hope you get your $100,000 back. Otherwise, it's a neutral return, right? So everything's triple digit. Otherwise, it's a fail of a project.
Oh, well, what I mean is return on top of that. Like, so you get back your 100K, and then what the additional is? So you got an extra 10,000, it's 10%.
Yeah.
50. So like, so what? So you said 150. So I guess a 50%. Increase in
50% of your investment would be the increase of the sale price.
Okay, that's still very good. Yeah.
For like, you're right. You could do skyrocketed triple digit returns inside of your line of work. For real estate, it's a little bit more traditional, unless you really have struck gold somewhere. You've been holding on to property for like 20, 30 years. Like you probably could at that point, but
50% is nothing to laugh at, man. I mean, like that's a fantastic return. Like we're talking about the stock market, which is, I think, should be. It really is the benchmark, right? To me, whenever I look at investments, it's really how would you do versus stock market, right? The U.S. stock market specifically, and that's doing 10% a year. If you did 50%, you did 5x that. You did the return of 5 years in a row in 1 year. That's huge. That's a massive improvement.
100%.
I guess with compounding, but still, I mean, if you could do 50% a year and do that consistently, even for a decade, I mean, you would never have to work again. Basically. Yeah. It's fantastic.
Yeah. I mean, I hate to say it, like you're going to hit some bumps and hurdles. Like,
of course. Yeah.
There's a lot of things that I've done, especially that I wanted to really understand it, doing it myself. And I think that's the most important play, to do it yourself. Like have your professionals work with them, because that's going to be impossible, but go through the process yourself so that you can be in a position to help others. And I think that's probably fair for you to say you started your business, you figured out how all these algorithms worked, and then now you're able to kind of coach your clients. And, if someone wants to say, hey, Rob, here's $100,000. What can you do for me with it? You know exactly what to do, right?
Sure. Yeah. I mean, we're not licensed as investment advisors. I think the regulations are very different in real estate versus the market that we're in. Whenever you're dealing with securities, stocks, options, that sort of thing, it's very heavily regulated. So if you came to me and said, here's $100,000, I'm not going to give you advice on, like, we don't give financial advice from a legal perspective, right? We don't do that because then we'd have to be licensed as investment advisors or licensed as a hedge fund or something along those lines.
Yeah.
So we don't give financial advice like that, right? Legally, we can't, right? And anyone that you see that is actually giving advice like that, either they have a license or they're doing something that's a little dicey, right? But the way that we approach it with our business is, look, this is our research. This is what we've been doing, right? This is how it's been performing. You make your own decision.
Yeah.
Right. Here's the code. You could run it yourself.
Yeah.
Right. I'm not going to tell you, do this with your money, do that with your money. Legally, I can't do that, but I can show you, look at how well this has been doing, right? This has been up 100% in the past 2 months. This one has a back tested result of 80% a year, right? And it's been so far following that path exactly.
Yeah.
This one I've been running and it's made me 50% in the past year.
Yeah.
Right. I could show you those things and I can give you the code and then you can do whatever the heck you want to do with it.
That's interesting.
Right. Yeah. I mean, I'm not an investment advisor, right? I'm not telling you, do this specific thing or whatever, but you do have access to that code.
Yeah.
You could choose to use it however you wish. Right. That's the way that we kind of approach what we do. Right. In real estate, I think it's a little different because you could actually just take that money, right? Like
you can take that money.
Yeah. You're not regulated nearly the same,
right,
as our industry. So someone could just literally just hand you $100,000 and you just go, okay, let me do something with it. Right.
Yeah.
Which is quite nice. It makes me think sometimes it would be nice to be in real estate for that reason. Right. But I think historically, the reason why that's the case is because of, I don't know if you ever watched the movie Boiler Room,
of course,
or like Wolf of Wall Street, right? Like people were just like literally ripping people off with like penny stocks and stuff. Yeah, exactly. So that's why these days you need to be licensed to do that, because even today there's a lot of bad actors out there. Like I don't know how often you've gotten this, but these crypto people are relentless.
Heard that, yeah.
It is insane. Like I actually had my brother-in-law, he went through the same sort of problem. Like some girl messaged him on Facebook. Who knows if it's a girl or not, right? But some girl messaged him and, I like you, blah, blah, that sort of thing. And then they start talking. And then next thing you know, they start talking about, or maybe they met on like some dating app even, which is crazy to think that these people are like on dating apps to like search for targets, right? But basically start talking, a little bit of love interest kind of thing. But then she starts getting into like, why don't you invest in some crypto? Or, so he puts his money into this and he never sees it again, basically. Right. And just the amount of scammers that are out there is ridiculous. Right. That's why I actually really like our model, because we don't even take your money. You don't have to worry about that with us at all.
Yeah.
Right. Because I'm not touching your money. You can use the software. You can run it however you want to do it. You keep the money on your own broker. You make the decision. Right. And you can get your whatever kind of returns you want to get out of that. Right.
So you're just giving them the technology, the code, right?
Yes, exactly. We license out our code. Right. So you pay us a monthly fee. It's like an upfront fee to kind of get access to our stuff, and then you pay a monthly fee afterwards, depending on what plan you get with, right? And then you can basically just rent our code out, right? You can get the exact code of the bot that made me 120% in the past 2 months. Take that code, you can do whatever the heck you want to do with it.
Now, what kind of background do these individuals need to have in IT, let's say? Because when sometimes you hear code, you hear sourcing, back-end development. So do people, like, what's the kind of entry point from their knowledge of using computer systems?
Yeah, so we spent that's a very good question. We've spent a lot of time making this easier. Like months upon months of like lots of effort, where we've gotten to a point that you can just like click a button and then it pops up in a different window, and then you customize it however you want and hit run, and that's it. Right? It's like super simple.
Plug and play, yeah.
Yeah, like I mean, I can get these days a bot up and running in like 2 minutes, literally. Right? Once you have your broker, you click a button in GitHub, right? Yeah. If you don't know what that is, not that important, right? You can make an account, it's fine. We have everything listed in GitHub. It's like different pages, right? And you click on the button that's there. It will load up in something called Replit, which is kind of like AWS or Google Cloud or something like that, but just automatically load it all there. And then you copy over your API keys from your broker and you run it, right? And that's it. Very, very straightforward. It actually sounds a lot more complicated than this. It's actually much more simple. Once you've done it the first time around, you basically click a button, copy over some keys, hit run. That's it. 2 minutes. Done,
yeah, really easy.
Right? Yeah, real super simple to run it. I think a lot of people, you're right, are intimidated to think that this is such a complicated thing.
Yeah.
But really, we've spent so much time making it so easy that it's not anymore. And actually, I'm in the process right now of raising some money, talking to a few investors out in the Bay Area. I'm talking to some investors out in LA. Some in New York potentially as well. I'm flying out there soon, or actually driving out to New York.
Close, yeah.
In August. But we're looking to raise capital basically to build out an iPhone app to make this like super easy.
Love it.
Right? Imagine you have an iPhone app, you go into it like Robinhood or whatever, right? You see your algorithms like, oh, I like this one, pick it, customize it, hit run, boom, that's it.
Yeah.
Right? That's kind of where we want to get to. And we want to make it so that this is like this big community of people that are contributing these algorithms. So it's not, so you don't just buy ours, you could buy someone else's, right? Like we want to create this whole community.
Like a Reddit, kind of, you guys talk about the plays that you made, returns, what's good out there, something like that.
Sure. We could introduce that kind of chat component as well. But really, I think of it more like an Amazon, right? Like you go into Amazon, you can search for things. What are you looking for? This thing matches the criteria that I want, right? Maybe you'll search for, okay, I want something that had a really, really good return in the past couple years. The back testing results show that it's a very low drawdown, depending on your risk tolerance. You might want to adjust that, right? You could also look at maybe things that you believe in, right? Like, what do you think is going to happen in the future of the economy? Do you believe in something that's going to do well with lower interest rates or whatever? We have like descriptions like that. Pick whatever you want, and then you can customize it and run a back test even.
Yeah.
To say like, this is what would have happened when you customized it.
Yeah.
Historically speaking, it would have done this.
Yeah.
Like, oh, that's actually sounds great. It didn't have a big drop. There's no drawdowns. It has a very high return. Matches what I like, right? Click a button, link your broker, it runs.
Yeah.
That's it.
Very cool. Yeah. I like that. Now, and just considering what I just kind of mentioned about, I'm an entrepreneur, but again, I want to be calculated with everything that I'm doing. When you are purchasing that code, is there an opportunity inside of this environment to have like a little test environment to go in there just to see like a mock play to make sure before you put all your money into it?
Yeah, absolutely. And in fact, that's our official stance, again, for legal reasons. Run this with paper trading.
Yeah.
Right. If you choose to turn on real money, that's your thing, right? You could do that. I'm not twisting or up to do anything. And I'm not telling you what to do with your money, but, you could take let's say our research of our code, You can run in a paper trading account, see how it does.
Yeah.
You feel more confident with
That's
that,
cool.
and then you can do, whatever you'd like to do afterwards, put real money into it or whatever. But at that point, you own the code, you have all those results yourself, you can make that informed decision.
Very cool.
You know what I mean?
Yeah, that's everything you need, all in kind of one system, one operating system. Do that. I imagine you have like all the dashboards and the report capabilities built into your software, the AI.
Yeah, absolutely.
Cool.
Yeah, definitely.
So I think you kind of touched on this, but what would be kind of the areas that you would recommend staying away from when you're investing? Like you talked about like a specific scam. Is there anything further on that you would elaborate on that would be worthwhile for people to know?
Yeah, I mean, definitely watch out for crypto scams. That is 100% something that is, honestly, it bugs me how much of this stuff is happening out there. And it's usually people from other countries, China, Russia, African nations, whatever.
Preying on older people too.
Basically,
right?
Yeah, it's ridiculous. So definitely stay away from that. I'd be very cautious when it comes to, like, if you're going to invest in crypto, invest in like the big brokers, right? Give your money to Coinbase, give your money to KuCoin, Kraken, Binance. These are ones that are generally safer. Still not 100%. I mean, FTX blew up, right? But Coinbase has been around for I keep a lot of my money at Coinbase. Their fees are pretty high, but I'm confident in them because they're public on the stock market. They're a huge company.
Yeah.
So I feel confident leaving my money there. Some people even say with crypto, you take it off and keep your private keys, but I don't know. It's a pretty advanced thing to do. And truth is that if you lose that thing, what's more likely, Coinbase going down or losing your USB drive? In my life, I think I'd put more credentials on Coinbase personally, but everyone can do that. Own calculus themselves. So crypto, I think there's still a lot to be concerned about there. I think in general, pitfalls that you want to be watching out for, though, outside of like getting scammed, is just like putting too much of your money into one thing and leveraging too much.
100%.
So those are kind of things that tend to blow up people's portfolios.
Yeah.
A lot of people come in guns blazing, like first time investors, I'm going to put all my money into Tesla. It's like the stupidest thing I've ever heard.
Lambo or bust, bro.
Like, come on, man. Like, okay, like rule of thumb, at least 10 different stocks in different industries, rule of thumb.
Yeah.
Right. I could actually show you how when you do the diversification curve, 10 to 15 is kind of the sweet spot.
Yeah.
Right. Beyond that, you could do more, but beyond that, you don't really get much gains. Right. And then less than that, you're just kind of being stupid. Right. There's if you like Tesla, then what other companies do you like? Maybe, Meta is one that I made a lot of money off of recently. I like Coinbase. I like a bunch of other things. By the way, you want to keep diversified, right?
Yep.
And you can diversify that not only with what names you hold, but then also the strategies that you're taking, right? So, for example, we have a bunch of different algorithms, right? So we have algorithms that will invest in crypto, for example. You buy one of those and invest in Bitcoin, Ethereum, kind of the bigger ones, whatever. You could have one algorithm that does that. You could have another algorithm that invests in smaller crypto coins. These are now two different strategies, right? So you're diversifying between those two.
Mm-hmm.
But they're still in the crypto market. So if the whole crypto market collapses, the whole thing kind of goes together. So you still want to diversify outside of that, right? Then we have another one that's like a diversified leverage bond. This one's been doing quite well with my money. Like I said, I was up like 50% the past year. Basically invest in stocks and bonds and all that kind of stuff and diversifies you pretty well using leverage in a smart way.
Yeah.
Right. That's like another type of strategy. Then we have another type of strategy that's like investing in stock options, selling iron condors and butterflies, which is a really interesting strategy because it does really well even when the stock market's falling.
Mm.
But in periods of high tension, there can be some pretty big drops, right? So for example, COVID or 2022 when Powell came on and said, we're raising rates. Yeah. That was kind of a shaky time period for those things. But they produce like crazy returns. Those are the ones that are making us like 100% a year, that sort of thing, right? Or more. But anyways, now you have all these different things, right? And that's the way that I look at it. Like I want to be diversified across all these different strategies, right? So now I have ones, this group of strategies is making me money when the stock market's even falling or going up, but has issues when there's big convulsions in the market. This one will do very well in upward markets, not so well in downward markets. But when convulsions happen, it's not like the worst thing in the world. doesn't do great, but it's not going to tear it apart.
Yeah.
Then the crypto one, and like, you want to have a whole bunch of different strategies. This is the way that, big hedge funds like Two Sigma or Renaissance, the way that they approach it. These are like these big quant funds. They manage many billions of dollars. I actually got to know someone from Two Sigma, and he's the one that kind of taught me about this because he wanted me to start a hedge fund with him back in the day. He was like this military guy from Two Sigma, very, very smart, but they basically sued the crap out of him and he wasn't able to do it. Even though they told him he could leave the company and start his own hedge fund, that they ended up just lawyering him until gave up on it, basically. But in talking to him, I learned a lot about how these funds work. And that's really what they do is they have 50, 60, 70, 100 different strategies all running at the same time. And then they have one big thing looking down on it and saying, well, okay, if this one doesn't do well, how is this one going to do? It's kind of like this. It's like a robot that picks robots, right? And then allocates money between them, right? It's like this really interesting structure of like, this is how you have individual strategies are all trying to make money individually, right? And then you have a controller at the top that's saying, okay, well, we're entering into this kind of environment, and this one has not done very well in the past, and this one is doing really well, and just moving money around so it keeps as low of a risk as possible, as high of a return as possible, right? That's the kind of way that I look at all this stuff and what we're looking to build out. Right now, we have a bunch of different algorithms. The next step would be adding on that layer that controls everything. All right.
Very cool.
So yeah, that's the way that I look at this kind of stuff. Yeah.
I think one of the key themes that we've heard is like touching on the theme of diversification. Like I think when we started off this kind of podcast today, we said just diversification and different income streams is like the smartest thing that you could possibly do. When you get a little bit more refined within the stock trading environment, you're saying you'd like to have 10 to 50 different types of kind of stock investments or areas that you would invest in across the board, just protecting yourself from any sort of risk and putting your eggs in one basket. And then on the real estate side, I think that message is extremely applicable as well, because you look at diversification specific real estate asset classes. Like I said, here in the condo market, we got completely burned. We got wiped out. It's been slow growth the last few years. So you got to be able to look at potentially moving that investment into other areas. So diversification by geographic location, I guess you could say in that standpoint.
Yep.
More favorable tax structures, better cost per real estate, high influx of rental demand. So yeah, it could be asset classes, it could be geographic, but there's always a way that you find diversification playing its role for you to be successful, which is, it's kind of astonishing to think of like those similarities between having success across these types of opportunities.
Yeah, absolutely. I mean, there's diversification across asset classes, like real estate versus stocks versus whatever, which I think you should be doing that. But then even within each one, there's diversification, right? Like real estate, like you said, different countries, different, probably probably don't want to be in office space right now, right? But there's like office space, residential, there's factories, right? Yeah. There's all these different Airbnb, right?
100%.
So you can diversify across all those. Yeah, 100%. I mean, you work with someone who's an expert in your field. Like after this conversation, I really want to do some of this stuff. I'm not gonna lie, because it's true. Like keep some of your money in real estate, keep some of your money in stocks, keep some of your money in some other alternative type stuff.
Yeah,
and then just in general, try to have as high of a return as possible and diversify even within those. And I think that's you do that for long enough, you can not only retire early, but retire with a nice yacht or something like that.
Yeah. And it's like a formula. It's like a safe play that and I think everyone's always said like making the first million is the hardest, but after you do that, it's kind of like compounded itself. You've got the kind of machine and the channel to put into place. It's kind of like on auto mode at that point.
Yeah, absolutely.
So I think one of the areas just to cap up off on here was where do you see the future of your respective industry? So when it comes to investments, like what do you see going on in, let's say, 10 years from now?
Sure. I mean, I think the biggest thing in what we're doing is AI, hands down.
Yep.
Right? Like everyone that we keep seeing is just nonstop talking about AI, how to build AI algorithms, how to use AI to make new algorithms. I think AI is eventually going to get us. What I'd like to eventually do in our business is start doing like algorithms for like real estate, algorithms for private equity. Like right now, that's pretty difficult to do.
Right.
But I think with the advent of AI, it'll make that sort of thing more possible. Right. I think eventually we'll have, I don't know if we'll ever solve the stock market, right? But it will become a lot more efficient over time. And then it becomes, okay, now start branching out into other jurisdictions outside the United States. Actually, I was talking to some people like investing in Jamaica, their stock exchange, investing in Dubai, their stock exchange is less developed than the United States or Canada. That's interesting, right? I think it's very interesting again for like these more liquid type assets like private equity or real estate, and algorithms run that, or venture capital, right? I think AI can actually get us into that. So yes, that's kind of the way that I see it. So I see AI being probably the main driver behind a lot of this stuff, and then really expanding out into different jurisdictions and different asset classes, and really being able to do a lot of different stuff there.
Very cool. AI is just such a huge contributor to just advancements in any sort of industry, and for you, I see relying on that and having a huge purpose for you.
Very cool. Absolutely. How about you?
So I think from the real estate perspective, I like to keep it fairly simple. I just look at trends and I say what's going on, and then I don't see personal wellness dropping off anytime soon. Meaning, like, people are always going to take time to go on vacation, spend it with their family, see cool places.
Probably more so in the future.
More so, I think you look at the spike like after 2020 specifically, when everyone was kind of, lockdown measures. Those numbers have been rising. Mind you, inflation rising and consumer income has been going down to some degree. But everyone's going to find a way to make it happen. It's like, I need a vacation, especially like in the, Gen Z, millennial, earlier families, they're going to find a way to make that happen. And what better way of making that happen than by doing it and making some money at the same time? So I love that whole model. I'm continuously building out like a robust portfolio inside of areas that I see high traction of vacation demand, where I look at average hotel rates versus the cost of an Airbnb, what those spreads look like as well. So I see inside of this industry, that whole wellness, that whole vacation factor, and then specifically the smart investors who have removed their money outside of places like Canada, and they want to learn how to do this in other places. So I see that demand and that trend increasing. So I think from that standpoint, being well positioned there would be key. And time will tell, but 10 years from now, I think that's what we'll see a lot of.
Yeah, so a lot more international, a lot of vacation spots is kind of like where you're thinking about. Future.
That's what I'm seeing as the biggest trend, and it just makes sense as well that people want to have a little bit of fun at the same time doing it.
Absolutely. I wouldn't mind that, Sorry, I got to go fly out to Dominican now. I'll look at my property. Got to spend the next week there working,
Say that to a Canadian in February.
Oh my God.
Go find some way to get inside of your luggage on your way out.
Even people from Boston, from New York, whatever, get the heck out of Dodge, just go down south for a bit. Give me an excuse. Why not?
Your money can go such a long way out there too, in comparison to here. So like, we're talking like half the cup. Like, I was just out in Cabo last month, and Cabo is like expensive in comparison to other places, but that's probably not the greatest example, but still, we were like eating for about 50 cents on the dollar compared to a downtown Toronto experience. You go to places like Dominican, probably less than that. And mind you, like, Cabo's going to have like super high end stuff. Like they have a Nobu out there. They have a Waldorf out there. They have your most elite 5-star chains or hotels as well. But like, they also have something that can, there's something for everyone out there.
Yeah.
You don't have to be like Kevin O'Leary's out there going to your nice yacht clubs and things like that on a regular basis. You can, it's cool. But you have every sort of entry level point. Your buying power just goes so far out there.
Yeah. I remember we lived in Tulum for a bit, and I was eating for like 15 or 20 bucks a day. It was crazy. You wake up, like, breakfast, tacos.
I love that. Tacos are like my favorite meal.
Like, so. You get some eggs. Eggs cost like nothing. And then you get tacos for maybe lunch, dinner. We used to get, my wife and I, this big plate of like rib steak and like sausage and like just incredible meat. It was like $10.
Yeah.
Or actually less. I think it was like $7. Like, if you could even at the grocery store buy that here. It's like literally half the price of the grocery store here, and they make it for you, and it's right down the street, And it's got like this nice thing. The dogs are hanging out with you too. It's
Yeah, that's a vibe, man.
It's cool, man. I love it.
Yeah, I love that authentic style, and it's still very, very safe. Like I think that's the impression a lot of people have. Like, how safe is your money out there? How safe are you physically in that environment? But specifically, like, you go to obviously some spots in Mexico, it's probably not a great idea to be going alone. But when we're talking about a place like Cabo, it's so safe. It's all expats, all Americans, it's all Canadians out there. And they just welcome your business. They welcome your tourism. You could be walking out with jewelry at 2 a.m. and you won't have an issue.
Yeah.
Now, there's always going to be places where you don't want to be at like 2 a.m., right? But for the most part, you're not going to have any issues if you're not engaging in stupid behavior.
Yeah.
So totally safe from that standpoint. I love the vibes when I go out. And again, just looking at kind of the certain economic, political, whole kind of fragmented landscape right now, like, no better time than take your money elsewhere.
Absolutely. I agree. Very cool, man.
So how do we get in touch with each other? What if people want to get in touch with you? What
Sure.
should they do?
Yeah. Go to a website, LumiWealth.com, LumiWealth.com. You can also follow us on Instagram, on YouTube, anything really. Like, we're all over the place.
Right.
Yeah, and you could go, if you go to our website, you can join our newsletter, tell you all about our stuff. We also have a starter plan that you can get started for free. So free for 2 weeks, so you can kind of experience what it's like. Or you could also book a demo with one of our team that could actually just walk you through all this stuff.
Cool.
So go to a website. There's a bunch of stuff that you can do there. Get the free trial, book a demo. I think that's kind of the best way to get started.
Very cool.
Yeah. How about you?
So currently in the process of building out the socials, but YouTube for the time being, the Wealth Academy. You can book a free call with me. Every single scenario is going to be different for different individuals. So we just walk through your circumstances, see where you're at. Then there's a complete whole other side to the sales side that I didn't really touch into today, but working with a lot of sales professionals who just want to be able to understand how they can get in, just similar to like how I got in. We can help you out from that standpoint too. So yeah, that's how you get in touch with me. I think we really appreciate the conversation today. That was super solid.
Yeah, absolutely. It was good talking to you.
Hopefully everyone got some value. I know I got a lot of value from everything you to walk through. We're getting a nasty echo right now, but okay. All right. Well, that's just in time, though. I think we were going to wrap it up here, right?
Back. So we were saying finish off. I think you gave where to reach out to you, or reach out to me. We'll put it also at the bottom of videos wherever we can. Right, we'll put these all over the place. I think especially YouTube, we'll have it in the comments or description section. Put it in there, and other socials we put it there as well. Right?
Yeah, perfect.
Yeah,
that's super solid. But yeah, this is a great opportunity. Just like I said, a lot of value from what I've learned there. So hopefully the audience saw a lot of value in both strategies here, and look forward to working with you guys. Hit us up, questions, comments.
Absolutely.
Love that.
Very cool. Great talking, man.
Likewise, man.
Cheers.